I want to transition to talk about pricing, something that I know we're both passionate about. And during your time at Confluent, you moved from subscription to consumption-based pricing. So my first question is, what signs told you that this was the right move?
For us at Confluent, it was kind of a no-brainer. We had, I would say, three business models, three ways we were selling, right? Our PLG side of the business, developers, technologists would actually come to our website. Very powerful because of the large open source community. The second piece was our on-prem product. Think traditional software sale. You're selling bookings, TCV, ACV. Then you have your revenue recognition rules, and you use the revenue recognition rules to basically forecast revenue. It was a truly cloud-native product. And it was different from traditional software. We are software execs, how we grew up. We never thought about gross margins because the incremental cost of shipping a unit of software was zero. But in a cloud business, incremental unit of consumption had real costs associated with it. That's why I say it was a no-brainer if you have to build a responsible business for the long term. Very early in our journey with Confluent Cloud, which was our cloud business, we knew that this is going to be a big part of our business. If we don't have consumption usage-based pricing, I don't think we'll be able to have control over unit economics of the business. Fast forward 5 years, today every AI native business has some form of usage-based or consumption-based pricing. It is needed. Otherwise, you're probably going to lose money. You won't have control over how the unit economics eventually shape up for the business.
Back then, though, did you view this as a one-way or a two-way door decision?
It is a one-way door. I don't think it was reversible. You know it, right? On the pricing side, for consumption-based pricing, it is not just the pricing.
No, it's your whole org.
Your whole org, how you're architecting the org. You have a multi-year plan of how you want to get there. But in addition to our CEO, who was leaning in, the trifecta was president of field operations, or CRO, your chief product officer, who's really thinking about product pricing, and the CFO. And just being joined at the hip as you're making these calls, thinking through how to build that business was critical.
Why can this be such a disorienting change for management teams?
As we are kind of going through our decision-making process, we tend to look at what I call as pattern recognition. You look at your past lives and you tend to figure out, all right, what has gone well? What are the decisions I've taken that have worked? And what are the decisions I've taken that have not worked? When we went through this transition, none of us had any pattern recognition. It was new. 5 years back, when we embarked on this journey, there were probably 2 public companies doing it at scale outside of the hyperscalers. It was Snowflake and MongoDB. Databricks was doing it, but they were private. There are a few other companies who had started the journey, but were much earlier in their life cycle. Not a whole lot of pattern recognition, not a whole lot of success stories. We were not competitors, so we would tend to exchange notes and learn from each other a little bit. It was a change, and it was a new change for management teams, but it was fun.
Did you have to add any metrics to your purview?
In a traditional SaaS business, what I like to say, the value creating event is discrete. At the point of sale, you know what your TCV is, you know what your cash flow is going to become. You even know over the next 1 to 3 years how much revenue you're going to get every month. That's the beauty of our RevRec rules. Our sales reps get paid. We recognize revenue as a company. So that's a discrete event. In a consumption business, your success as a company depends on your team continuously engaged with the customer, your customer using your product every day and being successful at it. So it's a continuous value creating event. Focusing on how you run the business from a weekly, bi-weekly, monthly cadence where you're looking at bookings forecasts, doing your revenue forecast, to a daily cadence.
In many ways, the booking is just the start of the life cycle.
The booking is just the start of the life cycle. The bookings doesn't mean anything. In a traditional SaaS business, once you have bookings, you know what your RevRec looks like. In a consumption business, once you have bookings, fantastic. You have a customer commitment, but you need to forecast for every customer their individual consumption curves. The cadence of running the business became a lot more dynamic and real time. So, with my morning coffee, it's always about looking at what yesterday's consumption was, tracking it, looking at outliers. And that's not just me, the broader business leaders looking at that. Long-term objectives don't change. They all remain the same.
Here's a growth tax that nobody talks about. Every new pricing model you ship creates a nightmare for your finance team. Usage-based pricing, now you're tracking usage against commitments. Product bundles, now you're untangling what to recognize and when for every line item. Mid-cycle upgrades, good luck manually reallocating revenue. The pricing strategies that drive growth are the same ones that break your finance process. Right Rev turns that irony into a competitive advantage. Your product team can ship new pricing without asking finance for permission, and your sales team can close deals without worrying about downstream chaos. But I've seen too many companies where sales are celebrating a huge quarter while finance is still trying to figure out how to recognize half of it. It's actually me. So here's a good place to start. RightRev built a free tool at calculator.rightrev.com. It scores your RevRec process, shows what's exposing you to risk, and tells you exactly where to focus before it bites you in the rear. Probably explains why your last close took so long. Check it out at calculator.rightrev.com. All right, without the Boston accent, calculator.rightrev.com.